Well, the unemployment rate was up to 6.4% in July. It's the highest level in 12 years, and it came as a bit of a shock to the market. In fact, I believe it's quite possibly the biggest market miss in history. It's come on the back of several different trends. On one hand, we've got employment, which is failing to keep track with population growth, but we also have a significant, well, not a significant, but a little bit of an increase in the participation rate.
So why are we seeing more people coming into the workforce now as opposed to before?
Well, partly that does reflect population growth, but there may also be some residual effect from the government budget in that because households are more concerned about the changes in welfare, they may actually be taking a more active approach to finding a new job. Unfortunately, there doesn't seem to be any jobs to find.
And we also saw quite an unusual shift in the balance between full-time employment and part-time employment.
Yeah, so full-time employment increased by around 14,000 people, and that was largely offset by a decline in part-time employment. This sort of continues a recent trend towards more full-time employment, which sort of comes on the back of a longer-term trend where we've sort of moved to a more casualisation of the workforce.
That's interesting though, because if we're seeing more and more full-time jobs created, surely that's a good thing for the economy, right?
It can be. I mean, certainly it implies that there's sort of a greater number of higher paying jobs. But overall employment growth has been quite weak. Neither of these numbers are particularly good. And as a result, we're seeing that weigh on income growth and eventually household consumption as well.
Now, Callum, as you mentioned, this is a massive miss by market watchers. They've been expecting something like 12,000 jobs to be created. Instead, once you balance out full-time and part-time employment, it was actually down by 300 jobs. That's had a big impact on the dollar, which has fallen this morning in trading. Why is that?
Well, largely it changes market participants' expectations for the economy. They were expecting the unemployment rate to remain at 6%. It's now up to 6.4%. And it sort of brings in play the possibility that the RBA might move to an easing bias and eventually lower rates.
So when you talk about easing bias, you're saying that they are more likely to want to cut rates then rather than increase them, which some people are expecting?
Yeah, that's exactly right. A few weeks ago, the market was pricing in around a 60% chance of a cut by the end of the year. That sort of eased after the inflation figures, but I suspect now with this significant miss that the market will go the other way, and they believe that the RBA will act soon.
Now, what do you say that these figures finally say about the general trend we're seeing in the economy at the moment?
Well, I think it's important to put it into perspective. The month-to-month seasonally adjusted labour figures do tend to move around a lot. This could be more noise than signal, and we shouldn't overreact to the data necessarily. But at the same time, the budget in May forecast that unemployment rate would remain at 6.25% for the next 3 or 4 years, which is particularly weak. And this seems to be sort of a continuation of those sort of figures. It's quite possible that the labour market is deteriorating further, which I've sort of mentioned in some of my articles recently. And it's certainly a trend that we should stay on top of.
And we also saw, though, some good figures recently about consumer confidence, which looked like it was bouncing back after the hit that consumers took from, a more austerity-based budget from the Abbott government. Might that consumer confidence help boost jobs, hopes, and growth going forward?
Well, it's a little bit hard to square away the consumer sentiment data with the new data we have on the labour market. Certainly, I would expect the labour figures to dominate, in that if people are losing their jobs or they're struggling to find a job, then that's going to weigh eventually on sentiment, but also on spending. And so I think probably at the moment the consumer sentiment data is the less reliable indicator of the household sector.
Okay, so these job figures will actually sort of start to weigh on people's minds, I guess.
Yeah, exactly. It's always a little bit hard to track how consumer sentiment tracks the broader economic conditions. But if unemployment is rising, then consumer sentiment should soon follow suit.
Callum Pickering from Business Spectator, thank you very much.
And thank you.